Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look at what's going on the euro currency. So it's a very interesting technical picture right now is forming, guys, because things that we see currently on the technical side, it's not actually agrees with the fundamental background, or at least potentially not agrees. We'll not see what will happen on the end of the May, but if you check the monthly chart, we have, as usual, put it in the report, you will see that potentially market could form the bullish grabber there on the monthly chart and starts flirting with the May City predictor line already. The same performance we have on the dollar index. Actually, if you will take a look at the fundamental picture, there are few reasons for any bullish reversal in the euro currency, if it actually stands at all. But technical is the technical for predicting some fundamental changes. And sometimes it happens, and very often it happens, when the technical picture gives the early signals and the fundamental picture and some specific drivers appearing later. Maybe this will be the case at this time as well, we will see. But currently we just have to be patient and see what will happen. Meantime, we'll take a look at the daily chart. On the weekly chart, the picture remains bearish. So actually, despite that recent jump that we see on Thursday, weekly chart barely has changed. So we still have the bearish context, bearish MA City, and the recent performance. Well, actually, we've got another inside week. So the performance of the recent 4 weeks stands in the range of this huge collapse, actually. So from this standpoint, we have bearish context for trading on a weekly and daily basis. So once again, as I explained many times, it means that we use weekly chart for a direction, while the daily chart we use for choosing the points where we could take the short position. And here is the important thing: until weekly trend remains bearish. If trend breaks, it means that that overall construction breaks, and it means that the context stopped to be bearish, it turns bullish. And here's a very tricky moment, that if you will take a look at the weekly chart, you will see by the May City predictor that trend on the weekly chart remains bearish until 108.03 area, approximately this level. To speak generally, it remains bearish until market stands below the confidence area. This is really very good point by two reasons. First of all, it makes relatively simple to trade because we do not need to place too far stops if we would like to take short position. Well, simplifies the overall trading approach. Second, it's very logical from the technical point of view, because just think about it. So if market will break the two confidence areas stands together, what actually will be the chance that single standing 600 level will hold further upward depreciation? Chances, as you understand, significantly lower. And this combination, when the actually break even of the weekly trend coincides with the last and major resistance level on the daily, seems absolutely logical in the current situation. And since you could see that despite recent rally, as we've got bullish reversal session, and you could tell that, well, actually we've got the upward action that you talked about. Last week we discussed this upward action and we said maybe this particular action will give us better chance for taking the short position, better price for taking short position. So currently the reasonable question is, so we've got this rally, should we sell? And I would say that, well, highly likely we should. But here, the last thing that we need to control. So bears this time has to be patient. In particular speaking, what thing we need to control? On the 4-hour time frame chart, overall performance stands really bullish. So we have acceleration on the CD leg, very small retracement right to the level that we have specified, right? Great upside bounce. So in the same manner as it was here, really fast. Overall performance here stands really positive. And we have to consider in this case the XOP, because OP already completed. Pullback after OP has happened. Now starts moment to think about the next target. But the problem is that XOP stands 109, which is first above the confluence. In this case, the trend on the weekly chart will turn bullish. And what is more important is that reaching of the XOP will erase totally big daily ABCD pattern that we have, and it will totally erase really fast CD downside leg. So actually, this collapse will be erased if market will hit the XOP around 109. So in this case, it's very difficult will be to call performance as a bearish, right? So what we're gonna do on the next week? If we carefully will take a look at the hourly chart, you will see that market right now is forming reverse head and shoulders on the top. Some kind of the consolidation, and most part of this pattern is already stands in place. It has perfect shape for this pattern. We have left arm slowly downward action, which is good for a bullish reversal pattern, right? Fast bullish reversal, which is once again good for the bullish reversal pattern. And market, take a look, starts forming right arm. So as bulls, as bears, have to keep an eye on this pattern. Why? For the bulls, it is clear. If you have missed opportunity for taking long position here and you would like to add or step in, that's the level that you need to keep an eye on. I just use 50% support because this better corresponds to the bottom of the left arm. But also here we have 618 level around 107.45, 107.46. You could find it by yourself. So speaking generally, this is an area that bulls need to keep an eye on, 107.45, 107.56. What does it mean? It means when the market starts moving here, you need to drop your time frame more to the 15-minute chart and start watching bullish reversal pattern. Your invalidation point will be right there, because your currency currently, well, it's a bit trapped in a too good upside performance. So other words speaking, it will be really break of the sentiment, break of the bullish reputation, if we call it in this manner, if market somehow will just return it back down and erase great rally on the Thursday. It will be breaking of the bullish short-term sentiment, and it will be negative sign. That's why actually for currently euro currency on a shorter term and from the bullish point of view have no options, have no choice, just start rising again from the area that we have just talked about. This makes simple for trading on the long side. Keep an eye on this level, watch for minor patterns on the 15-minute chart, on the 5-minute chart, and place stop below the confluence that we have on the 4-hour time frame chart right there. That's actually all the trading stuff that bulls need to consider. For the bearish situation, things a bit different. Since we're considering taking the short position, we are watching for this pattern for the purpose of its failure. So if hand shorts will fail by dropping below the zero, moving back to these lows, this will be signal that we're ready to go down. And that will be the first sign that probably it makes sense to think about taking the short position. If hand shorts will work, in this case, we have no choice but wait when it will be done. We have to wait for this ABCD pattern to the upside, maybe to the XOP target, see where market will stop. Then we'll start checking what was going on the weekly chart, whether the trend is valid or not. So this is long story. And here, just let's keep it simple that if hand shoulder starts working, we're not taking short position, we just sit in the hands and see what will happen. If bears will get lucky, maybe upper direction will stop somewhere in this area with some kind of the ABCD minor extension, and market will try to keep chance for the bearish reversal. So it's also possible, but this will be clear later. So currently we can't say that. That's maybe, hopefully it actually sounds not too sophisticated. I'm trying to explain it step by step, just to not confuse traders on both sides. But the situation stands in the way that actually we have just discussed. Let's see what will happen. Next week probably will be not as boring as this one, as we should get CPI numbers, retail sales, and other stuff. So probably the volatility will be higher. So let's see.